Hey everybody, it's Jason with Level Head Trading. How are you doing? Yes, it's been a while. I apologize. Couple of reasons. I've just been busy trading, really improving on my game. Really excited about it. So that takes precedence. The other reason is just a little disappointed still, just haven't gotten really too many new subscribers. Anyway, enough about that. If you're not subscribed and you like what you see, please subscribe. I'm going to keep trying to do this. It might not be as often, but I think I have some really valuable information. I've been trading now for 5 years, and everything is really starting to go well for me. So, like to expand on the YouTube channel, teach, and maybe give some classes in person someday. We'll see how that works out. So let's go right into the chart. I'm just going to talk about the weekly and briefly a little bit on the monthly chart because that's all that matters. Things are falling and just big drops. So what I mentioned before, if you've watched any of my previous videos on Tesla, is at first I had talked about holding around the 160 level, 160 as a potential higher, uh, uh, as a potential bottom, but that didn't play out. So then I said the last thing before you don't have any support is this little weekly candle. I'm on the weekly chart here. This little weekly time frame here, where the low is 152.37, and the lowest we reached was 153.75. So basically within a dollar of the low of this week right here. And it's not a particularly long period of time that it built a base of support. Now, that's not to say that this couldn't hold, but if you just have 1 week and then the next week and the next week and then you just shot up. So there really wasn't much of a base accumulating shares. It just happened really quick, and it was a higher low from this one. Pulled back, and then this is the higher low. So I don't think it's going to hold this. It's just a dollar away. And what I'm looking for is where was, besides this, and again, this was really quick also. You didn't really have much time to react on trying to catch the bottom on here. It's very hard. You're never going to really catch the bottom, but you would like to, scale in some positions. That's my approach, and try to get, close to finding the bottom. And then as it builds and makes higher highs and higher lows, that's my new thing now is I buy a base that I hold on to, a no touch position where I'm just going to hold it no matter what. Well, I shouldn't say no matter what. If it broke 101, which is this low, then I should get out of it. But anyway, I don't think we're going to go there. So this is what I'm looking at. This goes back, and again, take a look at my videos. This was what I was looking at when I have a video where it talks about Bitcoin going down to 150 to 120. And I'm referring to this block of time back here, which happened in 2020. This took 3 months to play out on the weekly chart. It's 3 months of time. Each of these is a week. So 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. You see? 3 months where it was gathering. The word is accumulation. It's a really good, you notice that where you build a base, that's accumulation. And then what happens is the people that really have the money, in my opinion, they don't want the price to go up because they want to buy as much as possible so they can make as much as possible before it shoots up. So they probably purposely, when it goes up too quickly, they probably purposely sell to drive the price back down, and then they buy more. And then it goes up and they're like, okay, we really don't want it to go much past this 150 area. and let's buy more. So they have weeks and weeks, months to buy, build that base of support. They're not well, yes, they're purposely creating that support because they don't want to buy $1 billion of Tesla stock in one day, whatever the figures is. Maybe it's 10 billion. I don't know. But whatever it is, they want to keep it in that range to get as many shares as possible. And then here they make double their money. At the top of this range, it's basically $300. So they double their money. And then again, it's called distribution. They don't want to sell it. They don't want to sell it all in one day, not all in one week, because it'll make the price go down too quick and they won't be able to make double their money on very many of their shares. So this takes a month and a half to play out. So they sell, and then the price, they don't want to sell too much, and then it gets pushed back up. I'm sure it's some retail that's going in there going, oh, we had a little drop, let's buy. It's going to go to $500. It's going to go to $1,000. And so they're selling into that strength, but not too much, not too much. So this is distribution. And then it comes down and then builds another base of support right here. And then from here, that's where you end up going all the way to $400. So then right here, you buy at 180, 190, 200, 230. That's the range here. And then double your money to 400. Here is accumulation, accumulation, establishing a range of price to not go too low because you don't want to give back all your gains from here. So you sell, get down here, and then you reload and buy and push it up here. So I'm under the impression that we need to get back into this area, have a long accumulation period that'll span over weeks and weeks. And so I'm anticipating that psychological 150 to 125-ish is where we're going to probably get some accumulation, where the price is just going to be back and forth for weeks and hopefully months, so that me, Jason, and some other people can also accumulate more and more shares of Tesla before it has its next push back up. And even if it were to go to this high, not the highest highs, not the 400, I'm not saying it won't at some point in time. It's certainly possible, but even if it were to go to this level, that is up around 260, 265. So if I'm correct and we bounce around 150 to 125, or maybe a little bit less, that'll be even better. Buy the shares down in that area, build a base of support, and see it play out over several weeks, maybe a couple of months, 2.5 months or so. Then, if you get your good average price, let's even say you average $150 and you get back up to 265. What is that? I'm going to guess that it's about a 70% gain. So that's how I see it playing out. And last thing I'm going to say is, if you go back in time with the RSI, when it's really in a strong downtrend, then you forget about the daily oversold. You go to what's the next bigger time frame, weekly oversold. So we've gotten really crushed on the daily, way below 30s. So the next logical bigger block of time frame that you're going to look at as far as getting oversold will logically go to the weekly chart. And if you notice right now on the weekly, we're at 35. So 30 would be considered getting into that oversold area. And if it plays out the way I'm saying, then if we do push down into the 145, 140, 135, 125, then we will get oversold on the weekly chart. Here, you got overbought, got to 70. This is just in recent time. And from 70, now we should return back to 30. And if we return back to 30, then again, that should fall back down into this price level. That's what I'm thinking. That's what I want. I've already bought some shares, very little. It's not anywhere near the amount that I want. So I want it to go down. I am happy to watch it go down because, in the bigger picture, even if I were to buy it at all in right here, and if I'm correct, let's say it goes to 120. So at the moment, if I were to buy at 155, 150, and it dropped to 120, that would be a $30 to $35 drop, which would be about a 25% drop for me. Here, I'm just giving you worst case scenario. Let's just say I went all in here. That's not worst case. Worst case is it goes to zero. But I would use a stop, right? If I went all in, then I need to put a stop level to control my risk. But anyway, let's just say it then bottomed out around 120. So I would have given about a 20%, I'd be temporarily down 20%. But remember, if I'm correct, and then you push back up and you get anywhere near 265, then you would have risked 20%, but the reward is triple, 3.5 times, 70%, right? So I am willing, I'm not going all in. That's why, since I don't know what the bottom will be, it's called scaling in. I buy some here, and if it goes down below the 150s, I'm going to buy some more. And if it gets to the 140s and under, then I'm going to start really getting aggressive and buy more. So that is my game plan. If you like what you see, subscribe. I will make videos in the future. It's just probably not going to be as often. Um, but I do also want to make videos on some other things that I'm not looking at, that I am invested in at the moment. Just a tip, one of the things that I'm looking at is not looking at, that I own some, is Boeing. Boeing is similar. It's high risk, high reward, right? I am not interested so much in something that's just, a couple of percent gains in either direction. I like the bigger moves. But anyway, stay tuned. My last train of thought, it finally came to me, is Johnson and Johnson. Johnson and Johnson. I like the risk reward in this. This goes back to 2020 price levels on Johnson and Johnson, and it just was getting crushed on the daily RSI. And here we go, daily RSI 21. So what does that mean? That means you're probably getting to the oversold on the weekly chart. So here is the weekly. I know shouldn't be doing this because this is a video about Tesla, but just want to show you how my mind works. So not oversold on the weekly, but the reason I'm have a pretty good position right now, even though the RSI is at 34, it's 34.5. The reason I'm interested is because we did not get overbought during these things on the weekly. The highest weekly RSI during this period was 55 and 55.4. So since you didn't go to 70, then I'm anticipating you probably aren't going to go down below 30 on the weekly RSI. The other thing that I like is there is a lot of action right in here. And where I currently have the line, this is the bottom down here where it got to 140, 143. That is the range where, it dipped below here, 136. And then over here, it got down to 135. But then it pushed itself, and notice this activity again, accumulation, back and forth, back and forth, back and forth. And then notice right here, the low of these candles, and then you took off and took off. So again, this is not anywhere near as big of percentage moves, but I like it, more conservatively. The high end here is 162. We're at 144. So that is $18. That's maybe 12, 13% upside. And if you were to use a stop around 138, 137, you're risking maybe 5 or 6% with a potential to make 14 or 15% or 13, whatever I said. So that's one of the things that I'm in right now. And I will probably add a little bit more tomorrow because I don't quite have as much as I would like to. Anyway, so that's my video for today. Hope you like it, and see you soon.